Welcome to the deep dive. Sometimes staring at these dense corporate filings, earnings reports, it feels like trying to untangle a massive knot, right? How do you actually cut through all that corporate speak and, well, the sheer volume of numbers to figure out what really matters? Well, that's exactly what we're here for today. We're doing a deep dive into the latest from Sarda Energy and Minerals Ltd. We've got quite a stack of their recent announcements here. We're looking at their Q1 FY26 financial results. That's for the quarter ending June 30th, 2025, and also some pretty crucial outcomes from their board meeting. Both of these were just released yesterday, August 2nd.
That's right. And the source material is quite comprehensive. We've got the official filings they sent to the BSE and the NSE, the detailed standalone and consolidated financial statements. Plus, there's a press release summarizing the highlights and even specific notifications about, personnel changes and the dividend. Lots to unpack.
Definitely. So our goal here is to sift through all of this for you, pull out the most important bits of information, the key insights. Think of it as maybe your shortcut to getting properly informed about what's happening with this energy and minerals company. There's some surprising details in here too. Okay, let's really dig in then. Looking at Sarda Energy's Q1 performance for fiscal 26, what were the big headline numbers that jumped out at you?
Well, the numbers are definitely eye-catching. If you look at the consolidated results for the quarter ending June 30th, revenue from operations hit 1,633 crore. Now that's up 32% from the last quarter. And get this, a 76% increase compared to the same quarter last year. Huge jump.
Wow, 76% year on year. That's substantial. What about the bottom line?
Even more dramatic there, actually. That consolidated profit after tax, or PT, came in at 437 crore. That represents an incredible 335% increase quarter on quarter, and it's more than double, up 120% from the same period last year.
335% QOQ. That's massive.
It is. And other key metrics showed really strong growth, too. Consolidated EBITDA was 697 crore, cash profit at 642 crore. Essentially, the company's operations are generating significantly more profit and cash. And even the standalone figures, while slightly different, showed a very similar strong upward trend.
Okay, that's some serious growth across the board. But, for you listening, when you see numbers like that, and especially those huge year-on-year jumps, is this purely organic? Or is there something else going on?
That is the absolutely critical question here. Because while the growth is definitely real, there's a major factor shaping these comparisons. It's the acquisition and then the amalgamation of SKS Power Generation Chhattisgarh Limited. That whole process was completed back on August 21st, 2024, and it became effective September 1st, 2024.
Ah, right. SKS Power.
Exactly. So what this means is the current results we're looking at include the numbers from SKS Power, which means they aren't, directly comparable to Q1 of the previous year, which didn't include SKS. You have to keep that context in mind. It's not just bigger numbers. It's a fundamentally different company profile now.
Right, so less apples to apples, more like apples to apples, plus a large orange grove. It's a transformation, not just growth.
Precisely. It signals a major strategic pivot they've made.
Okay, so that makes sense. And it leads nicely into something the press release specifically mentioned. It called out a new growth engine. Can you elaborate on that? What's really powering this transformed Sarda now?
Yes, absolutely. And it's very clear from the numbers. Energy. The energy segment has definitively emerged as the main driver of growth for the company. Just look at the contribution. It brought in 800 crore in revenue. That's nearly half, 47% of the total consolidated revenue.
Almost half from energy alone.
And even more telling, the energy segment generated 467 crore in EBITDA. That accounts for a massive 67%, two-thirds, of the consolidated EBITDA. So this really backs up their claim. It shows how they've shifted into becoming this energy powerhouse, as they put it.
Okay, energy is clearly the star, but Sarda traditionally had a strong metal side too. How did that segment fare in this quarter, especially with this big shift towards energy?
Yeah, good question. The metal segment actually held up quite well. The company described it as posting a steady performance. And this was interestingly, despite facing what they termed lower realizations, which basically means they were getting lower prices for their metal products in the market.
Lower prices, but steady performance. How?
Stable volume growth. They managed to keep production and sales volumes consistent. So it shows a certain operational resilience in that part of the business, even when market conditions aren't ideal.
Okay, resilience in metals. Now let's get into the nitty-gritty a bit. What about the actual production and sales volumes across their different products? Any particular standouts there? Or maybe some numbers that made you pause?
Oh, definitely some standouts. On the production side, Hydropower output was up a staggering 431% compared to the previous quarter.
400%. Wow.
Yeah, huge. Steel billet production also saw a healthy increase, up 35% quarter on quarter. Wire rod was up 54% QOQ, and domestic coal production jumped 117% compared to the prior quarter. Even power from their thermal plants and the newly acquired IPP saw a solid 13% QOQ production increase.
Okay, strong production across the board, especially hydro and coal QQ. How does sales track?
Pretty much in line. Hydropower sales mirrored production, up 434% QOQ. Wire rod sales climbed a very strong 80% QOQ. Now, a couple of caveats here. Hydropower generation is naturally seasonal, so big QOQ jumps in this particular quarter aren't totally unexpected.
Yeah.
And the IPP segment, the independent power producer, that was acquired relatively recently, remember? So the year-on-year comparisons for that are tricky. But here's an interesting one. Domestic coal. Despite that huge 117% increase in production quarter on quarter, sales of domestic coal actually dropped 89% compared to the same quarter last year.
Down 89% year on year. That's a massive drop, especially when production was up QOQ. What could be behind that?
It's certainly notable. It could suggest a few things, maybe a strategic decision to use more coal internally, perhaps difficulties in the domestic market, or maybe building inventory. It's a point that warrants watching.
Definitely something to keep an eye on. Okay, so the financials look strong, largely driven by this energy transformation. But performance isn't just about quarterly numbers, right? It's also about strategy, leadership, the framework. What moves did the board make behind the scenes? Any significant decisions on funding or people?
Absolutely. Strategy was definitely on the agenda. First off, the board gave its approval to go to the shareholders and ask for consent to raise funds, specifically up to 1,000 crores, and they plan to do this through debt instruments like bonds or debentures.
Okay, so potentially more borrowing capacity. Is this for something specific?
They described it as an enabling consent, so it's not like they're borrowing that money tomorrow. It's about getting the flexibility, the option to raise capital when they need it for future growth or projects, likely linked to that expanding energy focus we discussed.
Makes sense. Gives them options.
Yeah.
What about the leadership team? Any important reappointments or maybe new faces coming in that reflect this energy push?
Yes, several key moves on the personnel front. Mr. Padam Kumar Jain was reappointed as a whole-time director. That means he's a full-time executive director involved in day-to-day management. His new 5-year term starts June 1st, 2026. He's a chartered accountant and company secretary, brings about 39 years of experience in finance, tax, corporate law, very solid background.
Okay. Anyone else reappointed?
Yes, Ms. Tripti Sinha was reappointed as an independent director for her second 5-year term, starting this October. Her profile is particularly relevant now. She's a BE in electricals, actually a gold medalist, and has 44 years of experience specifically in the power sector.
Ah, very relevant indeed given the energy focus.
Exactly. And the filings specifically note that neither Mr. Jain nor Mrs. Sinha is related to other directors, and neither has been debarred by any regulators. Standard but important governance points.
Good to know. Any new appointments signaling their direction?
Yes, and this one really highlights the energy strategy. They appointed Mr. Arup Paul as senior management personnel. His designation is president and plant head for the IPP segment, the independent power production side. This appointment was effective immediately August 2nd. His background is, well, extensive. 38 years in power plant project planning, commissioning, operations, maintenance, and he's worked at major companies like NTPC and Adani Power. So bringing in that kind of heavyweight experience for the IPP really underscores their commitment there.
Yeah.
It really does. Okay, funding flexibility, experienced leadership, specific power sector expertise being brought in. It paints a clear picture. Now, this brings us to something that can seem dry, but is actually fascinating. Corporate governance. The board also looked at amending the company's rulebook, the Articles of Association. For you listening, these kinds of changes can seem minor, but they can signal real shifts. What's changing, and why should we pay attention?
This is actually quite a significant proposed change, particularly regarding Article 26. It deals with the right to nominate a director to the board. Previously, that specific right was held only by IDFC Limited, likely stemming from past financing arrangements.
Okay, so one specific entity had that right. What's the change?
They're proposing to broaden it considerably. The new wording says that if there's an event of default, meaning the company fails to meet its obligations on a loan, for instance, then the general lenders have the right to appoint one director or an observer to the board. Lenders here means banks, financial institutions, basically whoever has lent the company money.
So any lender could potentially get a board seat if things go wrong. That sounds like a big shift in influence.
It potentially is. This nominee director wouldn't need to own shares, wouldn't retire by rotation like other directors, and could sit on board committees. The company covers expenses, but fees go to the lender. For you, the listener, this means potentially more direct oversight from financial partners, especially if the company takes on more debt using that new approval we discussed. It could bring discipline, but maybe also influence strategy.
Interesting dynamic. What other changes to the articles?
Two others mention they're proposing to change Article 28 to raise the maximum age for appointing a director from 75 years up to 80 years.
Extending the age limit. Why might they do that?
It could simply allow them to retain highly experienced directors for longer, maybe keep valuable expertise on the board that they might otherwise lose due to an age cap. And the last one is proposing to delete Article 37 entirely. This article apparently details the procedures for using the company's official seal things, like needing a board resolution, having a director and the company secretary present. Quite old school administrative stuff.
Deleting the rule about the company seal.
Yeah. It probably suggests they're modernizing their internal administrative processes, maybe moving towards digital signatures or just streamlining things. Less formality.
Okay, so governance changes, potentially giving lenders more say,
Huh.
allowing older directors to stay on, and maybe some administrative cleanup. And finally, what are the shareholders? Anything specific for them coming out of this meeting, particularly regarding dividends?
Yes. Good news for shareholders on that front. The board has officially fixed the record date for the dividend payment for the financial year 2024-25. That date is Friday, August 22, 2025. If you hold shares on that date, you're eligible.
And the dividend amount.
It's set at 1.50 per equity share. Keep in mind the face value is 1 per share. So 1.50 euro dividend per share, record date August 22nd.
Got it. Okay, what an insightful deep dive this has been. We've really unpacked a lot here. We've seen a company posting some really impressive financial growth, clearly being supercharged now by its energy segment, and at the same time, making these deliberate strategic moves in leadership, funding flexibility, and even tweaking its governance rules to sort of match this new reality.
Absolutely. That transformation into an energy powerhouse, as they call it, isn't just talk. It's very evident in these Q1 results. And the moves like hiring Mr. Powell for the IPP, reappointing Ms. Sinha with her power background, seeking that debt-raising flexibility. It all points in the same direction. Even those governance changes, like the lender nomination rights and the director age limit, seem to fit into a picture of a company gearing up for growth and managing the associated financial relationships.
It definitely feels like a company in motion, reshaping itself.
It does. And that actually raises a really interesting question for you, our listener, to maybe ponder. How might Sarda Energy and Minerals Ltd's intensified focus and likely increased investment in this energy segment truly reshape its position, not just internally, but within the wider energy and minerals market over the next few years, especially when you factor in this new flexibility they're seeking around debt and the potential shifts in board influence? Is this a path towards becoming a more specialized energy player, or will they try to maintain that dual metals energy identity, Bell?
A great question. Will the energy tail eventually wag the entire dog? Something to definitely think about as you process everything we've discussed today. Thanks for tuning in to the deep dive.